Hey guys, Mike here. So, oh boy, what another green day, and we haven't seen a streak this long of green candles since November of 2021, if I'm not mistaken on that. I believe that's what I read today. And so it was a weird one because small caps didn't participate. They were red. The SPY was only up 0.1% to the last 3 minutes of the day. And in the last 3 minutes, it shot up to about 0.3% for the day. But it was all about the Mag 7 and some other tech stocks, but definitely tech, right? Tech was roaring. We'll get into all that and some very, very important things to watch out for. And also, I'm going to answer a question I get more DMs and emails about right now. It seems, and it's about what's going on with Tesla. Like all the other Mag 7 are just roaring, about to go to all-time new highs, and here's Tesla. And so I'll come on with my answer, and then we'll see what answer you have. But I did want to start off with something funny, and then we'll get into something that I did a video on 2 years ago, and I warned people about it. And, you know, again, people never want to listen to anything until it happens. And they'll go, oh, it's not a big deal, whatever, you know. But this is the kind of stuff that happens when stuff escalates. And I was waiting for them to do this. Now, to kind of get a laugh, I did enjoy this meme right here where they had a bear basically on life support. It's got, you see the screen over there was QQQ just skyrocketing and stuff. And definitely a tough one for the bears right now, or anybody that's been short this market and continues to try to stay short. Good luck to you. Now, China comes out today and they say they will tighten rare earth export controls, requiring exports to report rare earth types and their export destinations in retaliation for what we are doing and trying to tighten basically how many chips they can get from NVDA and other companies. So I'm not surprised. And the reason why this is a big deal, and I know a lot about this because I did a video on it 2 years ago, is because they did control 90% of this market. Now they only control around 70% of rare earth minerals. And for us, the last time I looked, we can't even process ours, so we still have to ship it to them. I could be wrong. I know they were trying to work on a place in Texas, I believe, about that. And the good news is, you know, we might not need the rare earth minerals for the battery and stuff like that in EV soon, because you can see the slowing demand, right? And you have Albemarle, or however you say their name, they're the world's top lithium company. Well, the lithium prices, if you ain't read lately, are falling off a cliff. So, of course, they got downgraded. Their price target is 140 from 253. But you can see the forecasts just aren't good. And of course, you've heard Elon talk about this when it comes to EVs. Again, this isn't a rare earth mineral right here we have to worry about. But there are so many other aspects we need for EVs and for a lot of things. I mean, weapons, you name it. We need rare earth minerals, magnets, all this kind of stuff to basically function. And again, this is one of those things when I did my research on it, I believe, if I'm not mistaken, Australia used to send their stuff to the Philippines. The Philippines said, we don't want no more of this because the job is horrible. I think a lot of stuff is radioactive. That's why everybody tries to send it to China. And again, we were trying to build something here because I remember President Trump, finally, somebody said it. He said, this is a national security risk, which it absolutely is. Like, we cannot make any of our military weapons, I'm talking about missiles, things like that, the high sophisticated stuff, without this. And we only have the one mine in California, right? And I think they were trying to get it processed in Texas, but, you know, I can only imagine how long that's going to take. Let me know in the comments if you're in Texas and you've read anything up on that, or that was still the plan. But I'm thinking, if it takes 18 years to get, you know, power lines put up, I can't imagine how long it's going to take to get one of those plants actually approved with all the red tape and stuff. But again, I think Australia is also, the last time I read, was trying to build something within their country way out in the middle of nowhere to try to process this stuff too, because you have to have them. But again, our politicians are idiots, and they allow one country to get 90% of the market, which is just ridiculous, by the way. But again, that's the people in Washington. That's what they do. And I was glad to finally hear a president say, this is a national security risk, isn't it? I mean, imagine if a country had 90% of, you know, the water market or something. I mean, it's just crazy, especially a communist country. That's nuts. But anyway, I'll stop on that because I can go on for an hour. Now, things to pay attention to here. 1, 10-year yields. Yields continue to drop. That's why you're seeing tech continue to roar, okay? You know, and basically, the RSI kind of told us this was going to happen when you got bearish divergence here, and it sold off. The reason why I'm bringing this up, because if it breaks that trend line right there, the last time we end up having bearish divergence on this one, we dropped quite a bit. As you can see right there, that was bearish divergence, and this thing absolutely fell off a cliff, and the market's rallied like crazy. So that was a 19% drop. So if we continue to do that right now, we're down about 9%. That'd be another 10%. Boy, you would see, man, I mean, it would be crazy, crazy rally going on. If you think this is big, just wait and see if that actually happens. Now, again, we got auctions coming up, which we'll talk about, which may affect this. Now, HYG, is smart money still buying into this? The answer so far is yes. I don't see right here any kind of bearish divergence, which is what I'm looking for, because a lot of times this is what you'll see on like an hourly time frame on HYG. You'll see it first here, and if you see it, does it play out all the time? Absolutely not. But many times I know I've showed you guys in the past, and it absolutely played out. You're going to see it a lot today. On many charts, you're going to see this happening right now. When you look at the daily right now, this one is some high beta stock or another. When it gets into the overbought territory, it usually sells off. Okay, so we'll see if this is coming down. Remember, SPY and HYG a lot of times tend to go in the same direction. We are getting really overstretched right now in this rally, obviously, which shouldn't be too big of a shot, but they continue to try to push this up. Now, the VIX seasonality is helping out. We talked about this one for many months now, and it's following it perfectly, right? So we'll see if it continues to go down or not be a big issue. You look to the left, come to the right. For the most part, it's followed it pretty much to a T, as you can see. Now, the big thing to look at here is what's going on with the breadth of the market. Remember, watch this carefully. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. And you can see here's QQEW, and this is the QQQ. The QQQ is still outperforming it since this rally started. If we come closer, though, and just look in the month of November, you can see they're not too far apart. So you're getting some breadth, some spread out into other stocks in the QQQ, which is a good thing. RSP is kind of a different story. You can see they're about 2% apart, which is a lot for this one. If we bring it closer, around 1%. So a little bit better starting out. But the big thing is the reason why you're seeing the SPY lag the QQQ, if you hadn't noticed, because the day was all about the QQQ, and so the last few days, is because of the Magnificent Seven, but also because what three sectors were up again today. We talked about this yesterday. If you didn't see the video, the aggressive sectors, right? The risky sectors. What's not defensive, and you can see like oil is falling off a cliff, so oil stocks are on the SPY, not the QQQ. You see healthcare, utilities, financials, all that stuff weighs down the SPY, and so that's why you're seeing the SPY lag right now, and the Qs are just roaring. And you can see they broke out of this downtrending formation, broke above this trend line, got to the October high, which is the big one. We talked about this a couple weeks ago, and stopped right there to kind of set us up for tomorrow. Again, you need drama and everything. If it does break through there tomorrow, reach for liquidity, there is a RTH gap, a regular trading hour gap right there. And then above that, you got another one, not far off. And so, again, I would look for it to grab that. If we grab that, maybe we finally start to sell off to come down for liquidity, start closing some of these RTH gaps, fair value gaps, everything is just left behind. And if I'm not mistaken, that is 1, 2, 3, 4, 5, 6, 7 green candles. Did I miss one? And so that is a lot of green with no kind of retracement right there, guys. And so let's see what happens tomorrow on this one. Again, you're starting to see, and you'll see this a lot on these charts on the hourly here. This, we'll call it bearish divergence, whatever you call it. I just call it divergence, where the momentum is like going, okay, we're getting a little overstretched here on a shorter term time frame. Does not mean a crash. It just means at some point in time, you have to digest the rally, right? It has to start reaching back down for more orders to start filling this thing to continue up higher. That's why markets, they always tell you, and it's true, don't go straight up. And you can see when I say the Magnificent Seven is in control, look what the most bullish flow was, top 5. Well, I should say Mag 8, because I keep talking about AMD, but again, it just keeps going up as well. So 4 out of top 5, Mag 7. If you want to include AMD, you can go Mag 8. That's Magnificent 7, by the way. That's what Mag 7 means. Now, on the SPY, one thing I'm going to say about this one, this right here is still in play as far as this inverse head and shoulders, which is a bullish pattern. Again, at what point in time, after 1, 2, 3, 4, 5, 6, 7 green candles on this one, will it finally digest this move, right? It doesn't mean a big move down, but we'll see if it does or not. Now, Tesla, I pulled out on a weekly to show you this. Like, this stock over the last 1, 2, 3 years now loves this range. So anywhere from 202 to somewhere around 275. I mean, absolutely, and it stays there. Remember, this is a weekly chart. It stays here for a long time. We were at the bottom of that range or somewhere near it. And so, again, that's where we bounced off of. You can see where we set today. So that's why, again, a question I get is, well, what's going on? Why is this one right here lagging? And before we even get in the chart, I think it comes down to one simple question, and Elon talked about this, not in this context, but when you think about the Magnificent Seven, if you had to rank them for which one's the most risky right now with high rates and in this economic environment where people are working multiple jobs and everything is trying to make it on the lower end, which one's number one? Well, to me, it's Tesla, right? It's the only one of the Mag 7s where you literally have to go out and take a loan. It was some crazy 8, 9, 10%, whatever it is for these car loans to buy its product, right? If you go down and say Google, we don't have to spend any money. I watch YouTube for free. I search for free, right? You look at Meta, right? You can go on Facebook for free. It's the ads they're getting paid for and stuff, right? I'm sure they got some kind of paid stuff. You go on Netflix, it's a cheap subscription to a TV. You go into Microsoft. Sure, we got to buy the software, but we don't take no loan to do it. And then, of course, they got their cloud and everything that the corporate people use and stuff. They're not taking loans for that. Apple, I'm sure we're putting it on the Apple card, right, where they're making more money on that for us to buy their computers and stuff. And I'm sure I missed one. And NVDA will probably rank number 2 just because if there is a slowdown, the chip sector is going to be hurt too, right? But that's a far number 2. But again, we don't buy those chips personally. So it's not, they're not at the mercy of individuals, right? They're at the mercy of the companies. And so that will be my answer. That doesn't mean they're going to run up because it's Tesla. It's the most traded stock in the whole world still, as far as I know. And I've showed you multiple times, when that call volume starts flowing in, it don't trade on fundamentals. It's going to go. Trades on news and options flow. That's just the way it is. And so that's why I think you're seeing it lag down, and either it's sending a signal to the rest of them or it's not. But you're seeing big money flow hard, and you'll see these charts here, into the rest of them. But that's just my answer. Let me know what you think down in the comments. Now, looking on a smaller time frame here for Tesla, looking on the hour, we did break above that trend line. I put this line here at 222.50 because, that one line right there, it tends to have problems with this one so far, at least over the last couple of weeks. You can see it rejecting multiple times or then falsely breaking above it and then end up selling down multiple times. Now, one thing that did help it pop today is that its insurance registrations were up compared to last week and everything. So that's not a bearish thing or anything for it at all. Now, that leads to AMD. Again, it was consolidating yesterday, took a breather, up again today. Actually started to break out of this supply zone right here. Stopped right there at the top of that resistance before it went into this volume gap right here. And, you can see the MACD RSI look really good. You come over here, I put a trend line in here. That's the all-time high right there. So next move up, if we continue to move up, would be the third touch. I would expect a rejection right there. That's usually what happens on these kind of longer-term trend lines. But when you look, this is another one, right? Because this has such an enormous move. Again, on the hourly, you're going to see this on almost every one of them, where you get this RSI divergence right here. And, it's just trying to say it doesn't have to play out, but hey, do we need a breather or what here? And so we'll see again on this one. You'll see the same thing on Amazon, I believe, here. But you can see just a massive move on Amazon. A lot of big money moving into this one. There's a regular trading hours gap right there. There's a trend line which is trying to break above as well. And when you go to the weekly, you can see right there, that line right there. That's where we rejected last time and sold off. So I'll move it down just a little bit, and you can see that's what I would see. That's what I think the market's aiming for. And we'll see if we get a triple top, or does it finally break through there. And when it does, this thing's going to 155 with a quickness, I think, to be honest with you, just because of how it's moving right now. But at some point in time, again, you got to digest these moves. And this is Amazon. Amazon doesn't move like Tesla and, NVIDIA, right? But in this case, it just happens to be. And you can see, slight divergence here again on this one. Doesn't have to play out. We'll see. And then when we go over here to Microsoft, oh boy, this one right here, almost there. I thought I was going to get to all-time highs today, to be honest with you, the way it was roaring out of the gates. And, you see it's getting overbought right there on the daily. Again, this is another one of those ones. When it does get overbought, it usually does take a breather. You can see many times when you see this happening, it doesn't mean it has to. It can still go up for a number of days right here. I'll be surprised if it sells off before it reaches that all-time high, because it's only like 1 to 1.5% away, if I'm not mistaken. But usually you'll see when it gets overbought and finally wants to sell down, it'll average between like 5 and 8% on the pullback, right? And so that's not a lot. We're not saying crash or anything else stupid like that. Just saying a slight pullback to, digest what's going on right now. Then when you look at it right here, you can see the same thing. This is very new, right? Seeing this RSI divergence right there. And I'll show you an example, and you can see it multiple times where this has happened on Microsoft here. And when we scroll back, you can see it right there where that was coming up. But then what happens, right? It still went up for just a little bit longer before selling off. And so that's what I'm trying to say. It can start, don't mean it's got to finish there, right? This thing can just, the RSI can keep coming down while Microsoft keeps coming up, right? Again, you see it right there, same thing. But when it finally does sell off, again, you can get anywhere from 5 to 9%. So just keep that in mind on that one. And lastly, you got Apple here, breaking out again out of this falling wedge right here, which have been in forever, hitting the October high. That's where it stopped today. So we'll see if we can break above that tomorrow. And when you see this is another one, that's what you're looking for. Is it going to be a double top what we got on Amazon a while back, or is this going to continue to plow straight up? And I showed you what the target was on the last slide right there. And you can see it, if it breaks through, come back down, retest. But again, this is another one, kind of fresh. It's more RSI divergence on it. They're all kind of looking the same right now, right? And you can see right there you had it, and then you end up getting a sell down. And so we'll see how it plays out. Those are the two biggest stocks. So Microsoft and Apple have been on a tear, right? And that's what's real. It's 13% of the S&P. I don't know what they account for. Was it like 15, 16, 17 in the Qs or something like that? So we'll see how that plays out. Now earnings, again, nothing big. You'll have Roblox, a lot of high beta stuff here, right? Warner Brothers, Under Armour, and then we'll go into AMC, Walt Disney, Twilio or Twilio, however you want to say it, Affirm. So a lot of high beta stuff going on there. Nothing that should affect the market at all. And then you end up with some mortgage data, but then you got Fed Chair Powell speaking at 9:15. So we'll see what he has to say. Had a lot of Fed presidents talk today, and I'll talk about that in just a minute. Then you'll have a 10-year note auction. And look, I have passed on what I've learned about bonds, but I'm not sure, do the notes sell easier than the bonds or not? That's my question, just an honest question, because I've never looked into it or not. Because it was the bond auctions we were having a problem with. This is a 10-year note. Thursday, we will have a 30-year bond auction. That'll be the bond auction. I don't know if notes go easier than bonds. I'm not sure. So if you happen to know, please put it in the comments so we can all know. Again, a lot of Fed presidents will also be speaking. A lot of them came out today. Mixed messages. Some of them are saying the same stuff about, oh, we might need to raise rates once again, or prices aren't going to come down the way they used to be, and all kinds of crazy stuff. But the market didn't care. It's just roaring up, right? Because they don't believe they're going to do another rate hike. That's where the market is at right now. This is it. They're done with the rate hike cycle. Here we go. Woohoo! Paul's rally. And, that's no surprise. So we talked about it. Nobody should be surprised by that. So plus with seasonality and all this other stuff. But eventually, it is healthy for a market to come back down, digest it, go for a liquidity grab before it moves back up, if that is what it plans on doing. This is what we talked about. They're really, besides the bond auctions, and it's just not enough data. You got jobs data, but I mean, seriously, and maybe the market will try to sell off on it if it doesn't come in soft as it didn't last week, or maybe it'll go, oh, it's soft, because what you're waiting for more than anything else is, when does bad news for the economy become bad news for the stock market? That's what you're waiting on. Right now, we're not there. So hopefully that makes sense and stuff. Again, let me know what you think down in the comments, guys. So hopefully you got something out of it. Hit that like and subscribe button if you did. I really appreciate it. And I will see you tomorrow.